about stocks this week. The Sensex ends the week above 17,500. We'll find out if this is the beginning of a turnaround in the market. Our guests pick Allahabad Bank and Syntex Industries as must-have stocks in your portfolio. We'll find out why, and we'll tell you if it's the right time to buy infrastructure stocks. Welcome to All About Stocks. You're watching ET Now. We saw range-bound markets this week, but we have plenty to look forward to in the coming month or so. Result season is around the corner. The monsoon seems to be looking up again. The Prime Minister is going out of his way to bring confidence back to the market. We'll spend the next half hour trying to find out how you can strategize your stock portfolio and be ready for a turnaround if you're expecting one. Remember, there's an email ID at the bottom of your screen where you can write to us with any question you have about your stock portfolio. You can also reach us on our Facebook page as well. Now, before I bring in my guests and we talk about what stocks you should be buying this week, Avan is here with the latest numbers on the market. Avan.
Lackluster would be the word used to describe the week gone by. You have the benchmark indices which barely managed to gain close to 0.5%. In comparison, it was the broader markets which outperformed, notching up close to 4% for the small cap index. Rate sensitives on the upside, the likes of DLF and Jayaprakash Associates, while Asian Paints and Hero MotoCorp were some of the big index losers for the week. Auto sales numbers came out. Bajaj Auto disappointed. You had it also the exclusive news that it's cutting its product prices in Sri Lanka. TVS Motor as well as M&M were below estimates. And on the flip side, you had Hero MotoCorp as well as Maruti, which came out with a good set of numbers. There was the retail stocks which perked up on the back of the news that the notification on FDI in retail will come out post the presidential elections, on the back of which most of these stocks were up and away. From the commodity pack, you had the rice stocks which gained as the government tapped the MEP on basmati rice. MEP is the minimum export price. Kingfisher Airlines was in focus. The creditors met in order to talk about its plans, and the bankers have asked the company to provide valuation detail on its property sale. Meantime, the metal space also got a bit of an up move as India may lift the iron ore mining ban in Karnataka this month, according to reports.
Right, and Avan, we saw rate cuts coming from across the world. Take us through what happened in the global markets as well.
Big global news, the European Central Bank went ahead and cut interest rates in an attempt to boost growth, cutting the interest rates to a record low of 0.75%, as well as cutting the deposit rates to zero in order to help tackle the crisis in the Euro bloc. This really came in line with market expectations, and this also followed a clutch of economic data which indicates that Germany is also entering a modest downturn. You had the main rate cut which was widely predicted, but the deposit cut to zero was a bit of a surprise which came in. And you had most of the experts who believed that this time around they were hoping for more action in order to tackle Eurozone's debt crisis. And in a surprise move in Asia, you had the People's Bank of China, which cut the interest rates for a second time in less than a month. And this is a clear sign that growth is in fact slowing down more than expected in Beijing. This move is seen as a major positive for the Asian markets and perhaps a hint that back home the Reserve Bank of India might go ahead and undertake similar action after last time's no-show in its monetary policy.
Thanks, Avan, for all of those details. Joining us now in the studio is Sharmila Joshi, the Head of Equities at Fairwealth Securities. And joining us in Delhi is Jagannadham Thunuguntla, Head of Research at SMC Global. Both of them are going to help us understand what's going on with the markets this week and how we can prepare for what's coming during the earnings season. Now, Sharmila, I want to start with you very quickly. The view is that the trend we're seeing in our market right now is an upward trend. That spike we saw on Friday last week, we've managed to hold on to it during this week. That we are seeing some sort of positive signs. Do you agree with some of the views that we might see 5,600 on the Nifty in the next 1 month?
Yeah, I think increasingly I've also been hearing 5,600 from a lot of people. And certainly I think it indicates, as you said, one thing that the trend seems to be changing and a lot more people are optimistic on the market than they were maybe 2 weeks back. So this week has been, I would say, a bit of a washout. I did expect markets to be a little bit more positive on Friday, given the fact that ECB did do the expected and cut interest rates. So I thought that market would react a little more positively. But perhaps that's factored in. So I think, therefore then going ahead, we have the quarter numbers, result season starting next week, as well as the fact that maybe, this time people are expecting something from the new FM, and so far whatever, sound bites we've got are very, very positive. So people are a lot more hopeful going into, the presidential election period. So yes, I think the optimism is increasing, I would say. And if we hold on to these levels and if we are able to build from here, then yes, I think 5450 is a real possibility.
Jagannadham, tell us now, initially there was this concern about a slowing monsoon. Those concerns seem to be easing off a little bit. We've seen the monsoon begin to catch up. We know the Prime Minister, as the new Finance Minister, gave an interview to a newspaper this week saying, he said a lot of very positive things. He said he means business as far as the markets and sentiment is concerned. He means business as far as investment is concerned. All of this together, do you think this points out to positive things for our market? Is this what the market was hoping to hear?
A lot more. I think no question about that. I think, frankly, Pranab Mukherjee's tenure proved to be not that exciting in terms of policy making, in terms of the kind of language of the communication that need to be heard by the market. But I think the Manmohan Singh appearing to be a lot more practical in that sense, and the market is giving clear thumbs up. And also the GAR-related, even the draft guidelines, and moreover, the ongoing discussions with the Mauritius, and eventually there is a strong sense that probably GAR will be postponed at least by 2-3 years more, meaning thereby that problem will be behind us comfortably. So I think once that is removed, considering the lower valuation that India is enjoying, there is a reason to believe that the momentum will continue. And in that sense, 5180, which will become a very, very strong support, which was acting as a resistance, now it will become very strong support. And one thing also is that Europe is also sort of with this European Supervisory Bank, and at least the measures are being taken, and November US elections are there. Before that, I don't think even Europe and US would like to mess up the mood.
What are your expectations from result season for the first quarter?
Not much, I think, and I think perhaps that is pretty much the view on the street. I think if anything, if something positive comes out, people will be more the surprise. The upside surprise would be more. For instance, when IT we kickstart with both Infosys and TCS, we haven't really heard very great things. In fact, TCS, posed their numbers last time, they were very positive, but in between we heard them backtrack and be a little more subdued in their comments. So I think if either of the companies, or especially Infosys, if they were to continue with their guidance and they were to sound, that it's business as usual, I would think that market would take it positively. So I don't think that the expectations are much going into this earnings season at all.
The results, like Sharmila was telling us, average results, no bad news would be good news for our market this time?
Yeah, the results will be bad, no question about that. The advanced tax numbers, 5% hike itself, suggesting that the profitability will be very much under pressure. And top of that, the rupee weakness will also make sure there will be enough forex losses for the optimism to cool up. So there will not be any pleasant surprises on the earnings front. But having said that, whatever that we are going to see in the results front probably will be the bottoming out procedure of the earnings, because RBI interest rate cut procedure will start, just a matter of time, maybe 1 or 2 meetings outside this side, meaning thereby the interest rate burdens will cool off. And I think eventually starting the second quarter, there is a reason to believe that the EPS should pick up, until and unless our politicians mess up again.
So very quickly, I want to ask you one sector that you favor at this point, one sector you would say stay away from retail investors' point of view.
I think I would favor the infrastructure and the power space, because I think that if there is crying reform that is required, that would be in power, and I think that can be that looks like it could be done. And infra, because I think you will see that investment cycle turn for them. So I think from that perspective, both these. And stay away, really, nothing particularly, but I think that we haven't heard very good things for telecom. So while prices seem to have bottomed out, I would not really think that maybe there could be any, they may not really participate to the extent you see other sectors participate.
Jagannadham, same question to you. One sector that you're favoring at this point to be a large part of this turnaround that we're talking about, and one sector that you'd advise people stay away from.
Banks will be clear choice of picking up, because one is especially mid-cap PSU banks, in the fear of NPA, the valuations are very, very reasonable, anywhere between 4 to 6 and price to book less than 1. I think if there is a capital infusion, if there is NPA figures slightly cool off, and if the RBI interest rate reversal starts, if any of this happens or all of this happens, I think there is a reason to believe that mid-cap PSU banks will be re-rated for the PE multiple close to 7 to 8, meaning thereby at least there should be 30 to 40%, 50% jump on many of these banks. Instead of putting money in the fixed deposit of these banks, go and buy the shares of these banks. You should be better off in 2 to 3 years.
And one sector to avoid?
One sector to avoid is real estate. I think valuations may be reasonable, that's all fine, but absolutely no hope on the sector because so much of lack of transparency and so much of parallel economy and all that. So I think I'm not excited. Fair enough, many of the stocks may be undervalued, but many other sectors are also undervalued. When other sectors are undervalued, why to make your hands dirty through real estate?
It's time now for us to move on to our segment called Stamp of Approval, where we get our guests to give their approval for your stock calls. Our first question comes in from Satish. She wants to know, can I buy stocks of Lanco Infra, GMR Infra and JSW Energy at these current levels? Would you approve that call?
I did say infra, but these are not exactly the names I meant. I think it'd really be better off to look at slightly better names, I think, even within that space. I think if I had to look, for instance, at power, I would look to buy a Tata Power at this price. Anything that is in the UMPP space, I don't really like Reliance Power too much, but, that's it. Then again, I think stocks like an Alstom, maybe, which is doing well on the back of, the fresh orders that it's getting. Or within the infra engineering space, I'd buy a Sadbhav Engineering, I'd buy an IL&FS Transportation. So, these would be the kind of companies. I think even an IVRCL at current price looks decent.
Deny on that particular call. Remember, she did give you other options that you can use instead of the ones that you've picked, but she said right now she's not giving you her approval for that call. Ashwin Jain has written in, Jagannadham, he wants to buy Coal India at current levels. Would you approve that?
Yeah, Coal India can be purchased at this level, no point. I think close to sub 300 levels will be much better price because 300 to 340 has become very strong range for the stock. So close to 300 buy, close to 340 sell.
Alright, so that's an approval there for that particular call. Manushree has written in, wants to buy BEML at the current levels. Sharmila, approve it?
No, again, I think I'm afraid not. I think that, the kind of concerns that we've seen on BML would make me think twice. I think it's, even irrespective, even if they were to come out of it and, nothing gets proven, the charges against BMD don't get proven. Why get into a stock at this point in time? Unless you know something that the rest of us don't, and that's why you have that confidence. So I would stay away.
Alright, stay away from that particular stock. We're going to step into a quick recap before we go into that. Remember, we talked about the fact that the market is showing signs of a turnaround. We're going to have to wait and see if the government, of course, starts to act on everything it's been saying, all of those positive noises we've heard from Delhi over the last 1 week. We want to see action on those noises. And, of course, the fact that both of our guests felt that 5,600 on the Nifty is something we might well possibly see in the next 1 month. Stocks and sectors to bet on, banking, mid-cap PSU and infrastructure. On the other side of this break, we'll bring you 2 stock picks from both of our guests, Allahabad Bank and Fintech Industries. We'll find out why you should be investing in those stocks.